there seems to be a pathway of people that are just parking all the animosity and saying there's a lot of things we can do within the industry to make it better. There's companies that are looking at introducing hydrogen generating units within natural gas streams, which is a beautiful thing to me because it utilizes the existing infrastructure. It utilizes all the skill set of the geologists and everybody else because you still need the stream. But then if you can knock the carbon out of the stream and create hydrogen, that now you're winning on all fronts.
Greetings, and welcome back to the Rose Bros podcast. This episode, we are joined by Terry Etam, energy executive and best-selling author of The End of Fossil Fuel Insanity. Terry has had a variety of experience thus far, all the way from executive-level positions and writing best-selling books to hands-on experience in the field. You can find Terry's writing on the BOReport.com as well as his personal website, publicenergynumber1.com. We sat down for a smooth cup of Rose Bros coffee and discussed why the Canadian energy industry is recovering, attacking energy supply instead of demand, changing energy cycles, 40% cash flow yields, and lessons from War and Peace. Enjoy! Also, this week's podcast is brought to you by A1 Media. Looking to grow your business online? A1 can help grow your business through its bundled media packages, including a website, newsletter, social media accounts, e-commerce storefront, or a podcast. Let A1 help tell your entrepreneurial story and reach millions of new customers. Check out a1dev.ca today for more details on how you can grow your business. All right, well, we'll hit record.
Okay.
Thanks for doing this.
Yeah, you're welcome. I'm happy to be here.
I really appreciate your time.
Yeah. Yeah, I follow what you guys are up to, and it's a good story.
It's been fun.
Yeah.
The last time we talked was September 2020.
Oh, is it? Oh, wow. Yeah.
Oil was about $0 at the time. Now it's at about $80 a barrel.
Yeah, it hit 86 today or something.
So what's changed?
Yeah, natural gas is up too. So back in the spring of 2020, I think was when the Saudis and Russia got into a contest about they're competing for market share, and they drove the price to zero. When COVID was hitting and demand was falling, they both announced plans to increase their production, and which was just a double or triple whammy, I guess, considering that the demand was falling at the same time. And no one knew what the bottom was. No one knew where oil demand would bottom out. Some people were saying we're going to lose 30 million barrels a day of consumption out of the world was consuming about 100 million barrels a day. There was speculation that could drop to 70 or 80. No one was really sure. The bottom fell out of the market. Natural gas had been in the doghouse for quite some time too, and especially in North America here. So it was really dark times for the industry. And then as it turned out, the demand didn't collapse anywhere near what people thought it would. I think it might have lost 10 million barrels a day for a while, and now we're back to record consumption again. So, and I think one thing that has changed is that the investment cycle has been sort of broken. I would say in all past commodity booms, when the price took off, a lot of money rushed into the industry, pumped up production, and that's why it's such a boom and bust industry. After the bust came a little bit of grief, and then good times again as prices took off and activity took off and drilling took off and profits took off. And this time it's different because capital is not coming back to the industry in the same way, even though the profits are there. So it's a very strange environment. As we were talking about before we started here, it's very pleasant, but it's very strange. I've never seen anything like it. So
the last time we talked when oil was at zero, I think it went down. It was negative at one
It went
point?
to negative for a day or two in Texas, which is kind of a weird trading phenomenon where people are forced to take physical possession it only lasts for usually a day if something like that happens, but it sure makes some headlines. So.
But since then, the pandemic has eased up, the price war has stopped, people are still consuming the products, so demand is outpacing supply, which is why price has gone up so much.
That's right. So we've been draining down global inventories for quite some time. I'll speak mostly on the oil side here. I think that's most meaningful for most people. And there was an oversupply of oil in 2020. The tankers were full, storage facilities were full. Now those are all being drained, or they have been being drained for like 18 months, and they're not being refilled just because that capital isn't coming back. U.S. shale was the biggest culprit, I suppose, that pushed things into surplus over the past decade. And there was like $500 billion that went into that. The Saudis and Russia were sort of reacting to that. They wanted to head off any more development. And so now that this bust has happened, the money isn't really coming back into the industry to drive production higher again.
Why don't you think money's coming back?
I think well, first of all, there's the Divest Fossil Fuels campaign, which has been pretty effective. I think there's a lot of funds that don't put money back. But but that's not the whole story, because there will always be money that will find its way to a profitable enterprise. An example, which I don't like to use for philosophical reasons, but people compare oil to tobacco sometimes, which I disagree with. But there's an interesting parallel when tobacco became public enemy number one for good cause. A lot of people wrote off the industry, but if you had put money into big British or big tobacco companies 20 years ago, you would have outperformed the market. They've done phenomenally well, and they return a ton of cash to shareholders. There's still demand around the world. And so that parallel is a bit like oil. The demand has come back, but the investment dollars haven't come back. So we're facing this shortage, and all of these companies that spent so much money drilling wells 2, 3, 4 years ago, those wells are still producing, even if they're high decline shale wells. They're still producing, and so they're finding themselves just overrun with cash here. There's a lot of companies that are paying off their debt entirely. That's never been on the cards before. Everyone has always tried to manage their debt at a certain multiple of cash flow, like 1 to 2 times was sort of viewed as an optimal range. And now they're paying it down to 0, which is like unheard of. And the share prices haven't rebounded either. So, and that was part of the new wave of investor attitude, I guess. Not just some shied away from oil and gas stocks, and some said, we will invest in you, but we want to return. We want to see dividends. We want to see money coming back to us. Tourmaline announced a special dividend the other day, in addition to an increase of their regular dividend. That's happening all over the States too. There's companies that are baking in a formula now where they will return half of their free cash flow, they call it, to shareholders. So that's a step change from what has happened in the past by a huge margin. In boom times, oil and gas companies had 3 sources of funding to increase drilling. They could borrow money. They could issue new shares if their share price was high enough to suit them, and they had their internal cash flow. Now the debt markets are essentially gone. People don't lend to oil and gas companies much anymore. A little bit, but not much. Companies don't want to raise equity because their share price is still low, and they're using half of their cash flow to return to shareholders. So from 3 big sources of reinvestment dollars, they're now down to half of one. Which is an incredible difference. And it works for investors because they're getting these big paychecks, like Tourmaline's shareholders. There's another small company in the BOE report that's just declared a 40-cent return. I think it was Pan Orient Energy or something. And that was, I've never seen anything like that before, but it's going to become commonplace now. So there was an interesting statistic by an analyst out of Toronto, Eric Nuttall, who runs a oil and gas investment fund. He's been pro oil and gas for a long time, even when it almost gave him a heart attack. And he has a statistic, a chart that he puts out in social media, that the average company in his coverage universe could buy back all of their shares and pay off all of their debt with 3.3 years of cash flow at forward strip prices, which is unbelievable. That's essentially taking a company private and paying off all its debt. It's just a new world of profitability. So, but part of the reason the investment dollars aren't coming back either is because there's just this uncertainty about what's going to happen to the industry. There's a lot of the people that want to get rid of hydrocarbons quickly have been warning investors that these will be stranded assets because of the energy transition. So if you sink a bunch of money into a new field or a pipeline or something, you're going to be left with an asset that has no value in 10 years. That's the subject of much debate, of course, but some people believe that, and some people are worried that that could happen. And so that's one reason that they're saying, I want all my money out of the industry now. Well, I can get it out. So
from a capital allocation perspective, the rise in energy shares has been great the last year or so. If you bought in the bottom of the pandemic, you'd be awesome. But if you zoom out a little from, say, a 5-year perspective, you're still down huge. So,
absolutely. I'm glad you noticed that. That's people get caught by the most recent headlines about how much the energy index has gone up. But there's a few stocks I follow that have, from a low, they've probably gone up 5 to 8 times.
If you bought at the low.
If you bought at the low, but they're still half of what they were 3 years ago.
Exactly.
So they haven't been great investments for investors. And a lot of people that have been around the oil and gas investing space remember this too, that I bought shares at $40. They went to $3 and now they're up at 20, and I'm not that thrilled.
Exactly.
Because I got half my money back. So it's kind of there's a tendency to measure against the extremes. We always see this when there's a downturn in something, then people measure against that base level, and it makes for better headlines, I think. So
maybe that's one of the reasons why people are hesitant to put money back into the industry. Like you were saying, it's just the uncertainty. Yeah,
there's a lot of uncertainty when you're making a product and there's a steady drumbeat that your product is going to be obsolete in 10 or 20 years. And there's not necessarily an exit strategy for that company. You can't just say, well, I'm going to sell my company because there's no market for the company. Others aren't buying others. There's a bit of M&A starting to pick up, but the next alternative is you say, well, I'm going to take as much money as I can out. So rather than reinvesting it into the business. So
do you think that's true? Do you think energy will be here with an industry in 10, 20 years?
I just don't see it. I just don't see the energy.
Going away,
the energy transition is, to say this brings much wrath down, but it's still a fact. There isn't an energy transition as of yet. There's fossil fuels accounted for something like 80% of the world's energy needs 20 to 30 years ago, and they do today as well. Mm-hmm. The energy consumption pie is growing, and renewables, the amount of renewable generation is growing rapidly. Mm-hmm. But the energy demand is keeping right up with it. So renewables as a percentage of
total growth
of the total pie is not growing. The pie is growing, but the percentage isn't. So we haven't. Now there's a lot of infrastructure being put in, so that will change at some point. But there isn't an energy transition as of yet. It's just an expanding energy pie, and I think that's it gets complex. But one of the things that I've been thrilled about with writing is the exposure I've gotten around the world, and I got to know a bunch of people in the African energy scene. One of the head of the African Energy Chamber read my book and liked it and posted a positive review online, and a bunch of people. I got a bunch of followers on social media, and I see their articles and I see the world through their eyes now, and it's a lot more so than I did, and it's kind of embarrassing how ignorant I was. And I don't think I'm alone, though. I think we have a perspective here of the way the energy world will unfold through our lens, which is a wealthy lens where we have everything we want and we expect it, and we can afford to moderate things. We can afford to buy Teslas. We can afford to have optionality in things. We can afford to buy local. But that's if you take North America's 400 million people and Western Europe's 200 or 300 million people, you're talking 600-700 million people out of a global population of 7.5 billion. Most of that 7.5 billion has a completely different worldview, and you get to hear that when I'm reading a book by this senior African energy lawyer, and he goes through country by country, analyzes what the view is like on the ground for them, and it's so completely different. There's a statistic that has been making the rounds in social media. A lot of people might have heard it, but the average energy consumption sub-Saharan Africa is less than the average American's refrigerator consumes, which is a startling number, but it's that's how the world works. Mm-hmm. So they would like to move past that refrigerator and maybe up to the microwave level, but we're talking about them wanting to get to a fraction of the energy that we use. And even if they got up to 20% of the energy we use, that would mean that their energy requirements would double or triple compared to what they are now. So where does that come from? The roadmaps that have been built for net zero 2050, there's a lot of people have said set net zero 2050 as a goal with no roadmap as to how to get there.
With supply.
It's a target. Yes. Yeah. And it's an ambition, but the question has always been, how will you do this? There's only one entity that I'm aware of that has actually put forward a realistic, I wouldn't even say realistic, it's an actual roadmap, and that's the International Energy Agency did that late last year. They said that their net zero roadmap to 2050, but it's not realistic, but it was real in the sense that here's what has to happen if we want to get here. here's the goalpost we have to hit. Number one is no more fossil fuel investments, period. They have to halt as of the end of 2021. The other one is we need something like 4 times the number of mines to provide all of the rare minerals needed for all of the batteries and the solar panels and whatever that are required to get here. Lithium, rare earths, a bunch of rare things I'm not even aware of all of them, this chemical soup. And so they said in stark terms, if this is net zero and this is what it means to get there, and if you governments, here's the path you have to take to implement it, which is one reason that I have no doubt in my mind that there's going to be hydrocarbons around for a long time, just because those targets are not really realistic. Well, first of all, we can see, being in 2022 already, the concept of absolute drop in oil and gas investments is not going to happen. There's still the world is crying out for more investment. President Biden is asking for more investment. China is asking for more investment. Europe, China, India, they're all bidding the price of LNG and liquefied natural gas and coal to record highs because there's shortages. So they're saying the world is saying we need more of all of this stuff. So the pathway just gets harder and harder as we go along. That doesn't mean, of course, that we won't make a lot of progress, and there will be some big breakthroughs. And I think that there's going to be a lot of progress made on carbon capture, and hydrogen is really taking off in a lot of jurisdictions. And a lot of these industries are in their infancy, and I think they're going to really blossom and take off. I mentioned that before we started here that I know almost no one that's starting a new oil and gas company, but I know lots and lots of people that are starting new renewable energy companies. Every week I see a new hydrogen company or a new something to do with the electrical grid or renewable fuels, renewable natural gas. There's just this I've never seen the activity like this, and they're ex oil and gas people, including there's one guy I know that is the most adamant anti climate change person. He insists that it's the whole thing is bogus, but he's now the president of a hydrogen company startup. So this is just the way the world is going. So these things will catch up over time, but the magnitude of it is just, even if all of these things work and hydrogen clicks and wind and solar find their right place to coexist with natural gas or nuclear or whatever, and if nuclear takes over, I'd still even the IEA, the International Energy Agency, in their 2050 roadmap, they still project that we'll be consuming something like 50 million barrels a day by 2050, even if everything ticks according to their plan. And they're on the natural gas side, it's even more will be consumed there in their aggressive emissions reduction scenario. Natural gas consumption in 2030 will be the same as it was in 2019. So in 2040 it falls a little bit. So the demand for hydrocarbons is going to remain. It's just going to be that the industry participants are going to have to do better, stop methane leaks, for example, to the extent possible, stop flaring as much. They're going to have to tie in gas. They're going to have to sequester carbon. I think those are going to help governments meet their goals, their targets.
Do you think the average person understands how much petroleum goes into everyday products?
Yeah, I'm pretty sure that they don't know at all, and they don't care at all. I think that they're, and I've learned this ever since I started writing. When I started writing about energy, I polled some people. I polled a good friend in California. Like I said, people don't seem to know anything about energy, and I'd like to kind of
make up,
just write. And I'm not a rocket scientist, but I just like, here's how oil and gas is found. Here's what this is. Here's what propane is. Here's how a refinery works. Here's what global demand is. Just some basic information. And I remember asking this friend and I gave her a list of like 30 things, and she went like, don't care, don't know, don't care. And then she said, at the end of the day, I know that fracking is bad, and that I don't like it when the price of gasoline goes up. And that's the sum total of knowledge. And then to break through with anything more, it's easy to fall into the world of statistics. Even if you tell someone the world consumes 100 million barrels a day, like, what does that mean?
Exactly.
There's no context to that. It's irrelevant to most people. And if you tell them that we might run short of propane. They say, oh, I don't use propane. Or a lot of people don't even know they use natural gas. Never mind. They don't know that they use it directly. They don't, never mind the fact that it goes into everything that we use.
Yes.
So there's this underlying reality which is not changing. The fact that our lifestyle is built on cheap energy, which is hydrocarbons. Then there's this messaging storm going on above about how quickly that's going to go away, and it's a lot of it is, most of it is just noise. But I do think that in the book I wrote, the very first sentence on the back of the book says we will transition off hydrocarbons at some point.
Well, it's a finite resource.
It's a finite resource, and over time it's just going to get more and more expensive. And the sad part for me, the tragedy is that if this had happened, if the transition had happened for economic reasons, if oil was $150 a barrel now, we wouldn't all be driving big SUVs. We wouldn't be buying ever bigger homes. We would be flying less. We would be insulating our windows. That's what you do when the cost goes up. Then the energy transition would have had everyone pulling in the same direction. And you would have these new technologies coming out and saying, hey, if you put in a heat pump in your house, you're going to save $2,000 a year. And people said, I'll take that. Now it's the messaging thing. It's like you should put in a heat pump because if you don't, you're killing the environment. And people feel a little bit guilty and they look around and go, well, what's that going to do?
Fancy term is the revelation of preferences, I think, where people say they want to do something good, but then they don't because it's cost.
That's an excellent phrase. Yeah, that's right. And then polls have shown that simultaneous polls that were done in the US and Canada, and they asked the mirror image questions, I guess. They said, how concerned are you about climate change? And more than 3/4 said they were concerned or very concerned. And at the same time, they said, okay, how much are you willing to spend to do anything about it? And 90% of the people weren't willing to spend $500 a year, and more than half in both countries weren't willing to spend $100 a year. So that's exactly the way you described it. It's a paradox. There's big aspects of human nature here that you just can't fight against. I used to rage against SUVs when they first became popular. I just thought, like, this is nonsense. Why are people driving these big monsters around? It makes no sense. And I remember even writing about that. Like, most of you people should buy a minivan because they have twice as much space inside and the mileage is twice as good. I mean, of course, but people just march on doing what they do, right? They just say, that's true, but I'm buying an SUV, and that's how we work, right? We might know something is, we want what we want, and we go and get it. We want to go to Mexico, even though we know it has a carbon impact. We want to, and I've yet to see any. There are people that really live to have a minimized footprint. And to varying degrees, some people give it 100% effort and some people give it a 70% effort, but most people give it a 5% effort, I would say. Even the activists that flew to Scotland for COP26 and those rows and rows of private jets, it's like, if nothing else, that's symbolic that you just don't care, that at heart you don't care that much, really. When you're as wealthy as Leonardo DiCaprio, you can do anything you want and you still choose to do that. You still choose to rent yachts for... and that's not just individuals.
He's a great actor, but by the way,
he is a great actor. Yeah, he is. I loved his work. And the EU recently quietly announced their EU carbon taxing scheme, and they've excluded private jets and they've excluded yachts, so they aren't going to be charged for their carbon footprint. Which, like, I can't. I don't think I could find anyone that could explain the logic to me of that, other than that there's vested interest that say, yeah, well, we'll just leave those aside because we like them. So these are the EU decision makers that are deciding this. The same ones that are saying we're going to have Fit 55, where they're going to slash 55% of emissions, and they turn off nuclear too, which doesn't make any sense to me. So I think there's been this big hurricane of panic about climate change, and it's forced a lot of people to act rather than think, and they acted, and we're trying to sort through it and get our feet back on the ground, I think. So
do you think it's easier to attack the supply side rather than fix your own demand side lifestyle choices?
I think attacking the supply side is just a exercise in futility.
Exactly.
And I think that's been proven the drug war would prove that without a doubt. The U.S. declared a war on drugs.
It's just easier.
Yeah. It's easier. Exactly. It's easy to block something. It's easy to block a pipeline. There's a company can spend $10 billion on a pipeline, and a handful of people can kill the project.
Right.
Literally. And you can block things easily. You can lay down on the street in Vancouver and block fuel shipments.
It's easy.
So that's the easy thing to do. But demand is the real issue.
The hard part is to fix demand.
The hard part is to fix demand. And you can never block supply anyways. Even if you want to, if there's money to be made, people in the world will supply that market.
Yes.
And that's just how the world works. And it's not just a capitalist thing. It was like that in communism.
Yeah.
It's like that anywhere.
Right.
It's human nature. And there will be somebody there that will meet your needs if it's available.
Right.
Yeah. Black markets, you name it, it'll so strangling the supply side is just for a long time. I think it really rattled and frustrated the oil patch, especially to listen to these endless attacks and these insistence we have to stop pipelines, we have to do, and it really did take a toll on the business, and it did nothing. It did absolutely nothing. So moves it to jurisdictions elsewhere around the world. So.
Do you think one of the reasons that capital hasn't been flowing into the Canadian energy industry as much is because it's harder to get a oil and gas business up off the ground nowadays? The entrepreneurial spirit has kind of been trampled on, or it's not there as much as it used to be? Or
yeah, I think there's a number of factors involved there. I would say it's not as easy to start a company as it was.
The real innovation, entrepreneurs.
Yeah, and used to be able to do it with very minimal money. I was at a banker's golf tournament 25 years ago, probably, and I got paired up with a guy that started an oil company with a $25,000 loan from his mom.
That's awesome.
And now you need tens of millions of dollars to do it. I mean, there are companies, I'm aware of like one or two that have started it with like 10 to $20 million, but they really have to go down a limb to buy a bunch of properties that are marginal or that have a big abandonment liabilities. With the way prices have turned out, their bet is working. If prices had gone down again, they would have been in grave trouble because they wouldn't have been able to service that debt, and abandonment obligations are a form of debt. So so that's the Western Canadian Sedimentary Basin. It's not as easy to go make a discovery as it was either. Now it's more a resource play. So you don't drill one well, you drill a 6-well pad, and the wells don't cost $1 million anymore. They cost $4 million a piece. So it's a different game too. So that's one reason I think that there's been less money coming back. And these high decline horizontal wells they've chewed up a lot of capital too. So they haven't done a good job for investors, which we talked about earlier, that's really turned people off. Just the amount of money that got poured into the industry and had poor or no returns. And eventually investors said, no, I'm not doing that anymore. So yeah. So there's a number of factors along with the uncertainty about it too. So.
Yeah, exactly.
Yeah.
Do you think we're on the start of a new energy cycle, or is it impossible to predict?
I think it's in some ways it's exciting. In some ways it's sad because the old one is the old booms aren't coming back. I don't think. Like if we see a drilling boom now, it's going to be much more muted, and it's going to be in certain areas of the province, and it's going to be limited crews, and it's just not going to be this province or Western Canada wide free for all anymore, or the oil sands, the pace of development there. I just don't think we're going to see that again. So I think that isn't going to happen. But I do think that there's this whole groundswell of new business that's coming along. That's the exciting part of the green revolution, I suppose, is that there seems to be a pathway of people that are just parking all the animosity and saying, well, we're gonna make this. There's a lot of things we can do within the industry to make it better. There's companies that are looking at introducing hydrogen generating units within natural gas streams, which is a beautiful thing to me because it utilizes the existing infrastructure. It utilizes all the skill set of the geologists and everybody else because you still need the stream. But then if you can knock the carbon out of the stream and create hydrogen, that now you're winning on all fronts. You're solving the carbon emissions into the atmosphere. You're providing a cleaner fuel, which the world is demanding. And so it's just these catalysts that are pushing these new developments. There's also people like Rundle I'm a big fan of those guys, Mike Rutherford, and what they're doing is they're just taking a new look at the industry. There's they recycle plastic liners that were used for frac fluids, and that historically they've just gone to a landfill and nobody's really batted an eyelash. Just like a lot of things have gone to a landfill, and they're taking this product and they're saving it from going to a landfill, which is great environmentally, and they're actually repurposing it now. And they're, first of all, they're finding a market for it, which is a great first step. But then if you can take it that next step and create a new use for that end product, the recycled plastic, like that's the key to a good future, if you ask me. I think that all of our money should be, and our effort should be, or the majority of it should be put into recycling what we have now. An energy transition built on developing 4 times the new number of mines isn't going to happen. It's just not. There's wildflowers in the middle of a lithium project in Nevada, which is the most promising one, and that mine is not going to happen because of these species of wildflower. That's happening around the world. The new president of Chile just put a block on a proposed copper mine. The world is going to need vast amounts of copper. So this is happening all around the world. There's these hurdles that are getting put up to new mineral development. And I think if the focus turns on saying, okay, wait a minute, how many TVs did we trash in North America last year that are winding up in a pile somewhere in China or somewhere that takes them? What's in those things? How do we get them out? And they're a disaster right now because people say, well, it doesn't make economic sense to recycle those. Well, let's make it make economic sense. And I think everything that we purchase should have a staggering deposit on it. I think a cell phone should come with a $500 deposit that you only get back if that phone is recycled properly, and all of the minerals are reused out of it. But you get your money back, just like aluminum cans. I think that Tim Hortons cups should have a recycling fee that's so big that people will not dare throw them out. They will go back to the proper channels.
Tax the demand side a little bit for once.
That's right. And you're going to think about your waste, right? And you're going to think about your consumption, and you're going to think, do I really need a new iPhone if I have to pay an extra $500? And maybe I'll defer that for a year. And then that helps with everything. And it's the same thing with plastic liners, like Rundle is recycling. If people say there should be a fee, there's a cost associated with consuming this. In some ways, it's like a carbon tax, except it's more like a product tax. The carbon tax is just on combusting it, which isn't fair to people. I don't think when you live in a cold climate, like the carbon tax on my home heating bill is getting to be a very noticeable number, and it's just going to get bigger and bigger. And what about the poor people in rural Canada that use heating oil? Like they're getting hammered even worse, and they're going to turn to wood is what they're going to do. So I think we're going to see a mass exodus from propane and heating oil to wood, and even in the city here, which is worse. Why wouldn't you? Like if the carbon tax keeps going up and my natural gas bill goes from $300 a month to $800 a month, I'll buy a wood furnace. So, and I think a lot of other people would too. So I think there's these second order consequences. So I think that carbon tax as a consumption limiter shouldn't be applied to life necessities like that, but it should be applied to things that are optional. It should be, unless you can recycle it and minimize the footprint of it. And governments could do so much. We don't all have to switch to EVs. What if you buy a half ton that gets 18 miles a gallon and you pay a $5,000 tax on it that goes towards a recycling fund or something? Just to say that there's a cost to what you're doing here. Or you could even incentivize people to keep their vehicles longer. Maybe you pay a graduated license where if you drive a vehicle for 8 years, you get a refund on your registration, or I don't know, something. Just an incentive for people to utilize things more and better than just the disposable society we have now. So,
just to touch on Rundle Eco Services, Mike Rutherford, shout out quick. They're doing a business where they can actually make money too.
It's profitable, right?
Yes.
Yeah. It's not dependent on government handouts.
Yes.
And that's so much of the green world that I see it's kind of, I'm investigating this myself. The little company I work for, we're looking at doing a renewable natural gas project. And the only way that the economics even remotely work is if somebody's willing to sign up to pay outrageous price for that renewable natural gas, and the only reason they'll pay that price is because they're ordered to by governments, like through carbon credits or whatever.
Yes.
So they're artificial markets. It's not real profitability. It's there because of a piece of government legislation. And a lot of wind and solar farms are no different. They're there because the incentives are so strong that people step up to, but they don't necessarily make economic sense on their own. And so
yes.
That's where it's great to see. And that's why I wish the whole thing would have been price driven instead of legislation driven, because then you would see companies that are stepping up and saying they would only survive if they're profitable, like Rundle. And they're going to have a great future. They keep cracking these nuts, and they're going to make lots of money, and they'll expand and develop new products maybe, or maybe they get into 3D printing or something, which I would love to see. Any plastic source, I think we could be making a lot of things here that we import from overseas, and why aren't we making it here? We have cheap natural gas. We have flare gas, which is free. We have free waste heat everywhere.
Yeah.
We have the technology. We have the expertise. We have all of these things. We have petrochemical plants which turn out the plastic that's needed to fuel 3D printers. So why aren't we making car bumpers here and you name it?
Yes.
Anything that's plastic. So, yeah.
Mike is also restarting the Eco-Capitalism podcast series, which I'll be co-hosting with.
Oh, good,
so
good.
The idea is to explore a handful of companies that are turning a profit, trying to get back to the environment a little bit. So if anyone is listening to this, stay tuned for that. And
I love to hear it. That's how it should be.
Making a profit.
Yeah, that's right. You have to. So a business that's developed around a government subsidy is not. It can attract some money, but it's not the right kind of money, and there's nothing sustainable about it. So,
do you think Canadian energy prices, the strength in the price, is going to continue?
So I would have to break that into the gas and oil components. If we could get global prices for our products, we would be making, I don't even know how much more money, double the money we're making now, especially on the natural gas side. Natural gas in Canada right now in the dead of winter is selling for about $4 a gigajoule. In the United States, it's probably the equivalent of about maybe $5. In Europe and Asia, the price went up to like $70 a gigajoule, and it's fallen to like 40 now. If we could get our energy on boats to capture that differential, Canada would be. We're leaving so much money on the table. There's a group called Resource Works in BC that focuses on British Columbia natural resource industries, and they were calculating that Canada's losing. This was before the great big run up in prices in Europe. Canada was losing almost $1 billion a week by not having that LNG terminal operational. But that's just the difference in the volume that we're shipping times the price difference. So I think that European prices could fall in half again to $15 or $20 a gigajoule, and it'd still be vastly more profitable than what we get here. So if we can get it to those markets, then I think we're and there's no end in sight for that demand on a global basis. It's just growing year by year. The oil side, we are more connected, so we do get closer to a world price, even though we're pipeline constrained. We're not that pipeline constrained right now because of the Line 3 expansion into the U.S. and Trans Mountain is coming and a few other expansions. So we're closer to global price. So but we're seeing that in the cash flow of Canadian producers. They're just printing money. So, yeah.
Maybe it is why a lot of those traditional Canadian energy companies have gone private, is because you don't have to worry about the public markets and you can just collect your cash flow and maybe pay yourself a dividend. Or if you own the company yourself, you can just collect all the cash in your pocket.
Yeah, that's right. That's right. The public markets are a double-edged sword for sure. They're access to capital when times are good, when people want to get in, but when people don't want it, then your share price gets pounded.
Exactly.
And you still have all of the reporting requirements and regulatory issues and the control over buying and selling shares and that sort of thing. It does provide a market for your shares, but there's a lot of downside to it too. And the market will dictate to a certain extent what you can do. For example, growth is a dirty word now. Like if there have been U.S. shale companies that have announced plans to grow production and their share price gets hammered. 5 years ago, they would have been rewarded for that, or that was the norm. The expectation was that they would grow, but the market is saying we don't want you to grow now. So companies are having trouble growing, even though it would make a lot more sense to do it. If a well was economic to drill when oil was $50 a barrel, it's wildly economic at $80 a barrel. So private companies are saying, yeah, we'll drill those wells because we're going to make our rate of return goes from 20% to 80%. So they'll drill them, but public companies can't drill them. So that's something else that's messing up the supply dynamic that it's just not coming back. Now that's I'm guilty of being North American perspective too. The majority of the world is of the world's oil production is in the hands of national oil companies, so they act different on different wavelengths and different triggers and different. Like Saudi Aramco, for example, is an arm of the Saudi government. They produce close to 9 to 10 million barrels a day, so 10% of world production. They have their own requirements that they're going to. What will drive their drilling and production levels are the biggest macro items you can think of geopolitically and their government's national budget deficit and that sort of thing. So and how much they want to finance new energy, build new cities, whatever they're up to.
Just
so
buy Leonardo da Vinci paintings and stuff like that.
It could be, yeah.
Did you see that story? He bought a.
I did not know.
Yeah. He spent $400 million on that Da Vinci.
Really?
They're not sure if it's even real.
Oh, no.
Yeah.
Oh, no.
At an auction house, $400 million.
Oh.
House money, basically, is what they referred to it as. So, anyways, That's a side story. Do you think that in Canada, at least, there'll be growth of private energy companies if the capital's still getting constricted from the public markets?
That's a good question. I think there would be. I don't think there will be a lot of growth. I think one problem is the expertise is just fading away. 30 years ago, when I started the oil patch, I started with a major, and the majors all hired university grads. They sent them on extensive training programs for years. And the technical people, I was a financial person, I didn't have the same sort of thing, but the technical people got sent to U.S. research labs. They learned techniques. They really became world experts.
Craftsmen almost.
Yeah, that's right. In geophysics, geology, petroleum engineering, reservoir analysis, all of these things. And that doesn't really happen so much anymore. Those companies are in harvest mode or shrinking. They're not developing new fields. And the newer growth of smaller company just doesn't have that depth. I'm sure they do some of it, but it's very limited. So there's a whole generation of hydrocarbon workers that are going to retire and they're not going to be replaced. You see that in the programs at universities. They're cutting back on the petroleum engineering programs. The geologists, or there's still geologists, but for other purposes, not oil and gas. That's all just shrinking. It's not a destination of choice for young people anymore. That's on the technical side, and same as on the economy in general. For a long time, Alberta was a magnet. Parts of Saskatchewan and Northeast BC, they were a magnet for people from across Canada. You wanted to, if you didn't have a great job at home in the Maritimes or Saskatchewan or Manitoba, rural Ontario, you came to Ontario or came to Alberta.
BC, yep.
You had any kind of job you wanted, and the pay was really good. Housing was affordable. Rural areas were booming. There's a lot of young guys driving around brand new trucks every year. Buying boats and vacation properties. And so never mind Fort Mac, that was crazy. So all of that happened, and it's not going to happen again, I don't think. So I don't think we'll see a boom anywhere near what we've seen in the past. So
in theory, if you had $10-20 million, though, you could go buy yourself an oil field and just pay yourself the dividend, collect the cash flow, and pay it off quick nowadays.
Well, a year ago, you could have bought quite an oil field for 10 or 20 million. Now it's a little harder because they're so profitable. But you're right, you could just clip the dividend, clip the coupon for 10 years and pay yourself a lot of cash. So that's an alternative. I think that a lot of people are hesitant to do it just because of the they don't know what they're getting in for. Like if you have a bunch of if you can assemble a team of geologists and production engineers and all these people to run your property and develop it and maintain it, that's one thing. But I think it's harder to find a team. It used to be quite easy to assemble a team, and there were many teams around, and now it just seems to be shrinking all the time
because of the uncertainty.
the uncertainty, and people are just moving on to like I said, the number of people I've seen probably in the past 3 or 4 months, probably half a dozen pitch decks from new startup companies for hydrogen ventures, or Advantage is spinning out a carbon capture company called Entropy, which is they're lining up clients like crazy. That's where people want to go. They're moving in that direction. And I know a lot of people, young people that are involved. If they're involved in the oil patch, it's like a tech sector or optimization. Crux OCM is a young company started by a young woman that was at TransCanada, and she's written some software to automate pipelines, and they're growing well around the world. Ironically, not so much in Canada, but they're knocking it out of the park, hiring people. So there's peripheral things, but as far as the pure production, I just don't see that it's gonna return.
You don't have a crystal ball, but do you think that energy stocks and equities are priced fairly now, or is there still a lot of room to grow for them?
I still think there's a lot of room to grow. They're just not even, they're nowhere near what they were before. Companies that were, like I said, that like the U.S. shale companies, some of them were $50, $60, $70 stocks 4 years ago, and now they're $20 stocks. And ironically, when they were at those prices, same as the Canadian ones, they would have $1 billion or $2 billion of debt, and their cash flow prospects weren't great because they had to keep drilling wells. Now they're on a more of a flatter production plateau where they don't have to drill as many. They can just keep their production flat. They don't have to grow. The market doesn't want that.
Right.
Their debt has been slashed in half or more, and their cash flow is through the roof, and they're so they're healthy, but it's I think it's just different now. It's a different dynamic for sure. So
I remember in the middle of the pandemic, I think it was Tourmaline's shares were at maybe $8. Now they're approaching $50.
Yeah.
And I was just kicking myself because it seems like it's such a well-run company, and if you put all your money in, you could have been a millionaire now. But
absolutely, and a few people did, and it's the ease of hindsight in one sense, because if you take yourself back to that point in time when the price of oil was in free fall and it was heading for zero, the global demand was falling, and people were saying it might not ever come back. There's a lot of people that were spearheading the energy transition are saying, okay, this was it. That was the peak of oil. I still hear that 2019 was the peak for oil consumption. And then it's only downhill from here. It's all going to, the activists were saying that was, we will never, we're going to build back better. We're going to, the Great Reset. This is all going to change, right? That was the peak. And now we're all going to go renewables. The governments are behind renewables. There's BlackRock with $10 trillion is behind green investments. Sustainable investment is everything. ESG is everything. And we're now turning our back on oil. And that was the heyday, and it's over now. So that was at the time, that was a very, these are the days of Greta too, right? So our prime minister was sitting down to meet with Greta and participate in her march saying that hydrocarbons are evil. And he wouldn't be caught dead posing with a oil executive, and he still wouldn't. So that was the mentality at the time. So it took a lot of nerve to dump a bunch of money into an oil stock at that time.
But that is the hallmark of a good investor.
It is, yeah. If you can see beyond that, and there are people that did for sure. They said that now is the time to load up on these things because demand is not dead. And it's not going away at all. So I don't know if anybody predicted that we would be back to record consumption within 2 years, but or especially record oil, coal, and natural gas. I don't think anybody saw that coming. But here we are anyways. But you're right. The hallmark of a good investor would have put their money in then. Yeah. And at the same time, I don't think that oil and gas stocks are fully valued yet at all. I think that statistic of Nuttall's that I mentioned, that a 3 year, it's 3 years essentially to take a company private. If you, let's say you had the wherewithal to go buy all of Tourmaline's, if Tourmaline is one of those companies, I'm not sure if they may not be because they've gone up so much, but if you were to buy every share of that company and take on all of their debt, and then you could pay off the money you borrowed to buy the shares and the company's debt within 3 years, and you would own that cash flow stream forever. Like that's
incredible.
It's incredible. Yeah. So that kind of doesn't happen in the business world. That's a severely undervalued asset.
curious as to where we are in the cycle, because if Tourmaline's fully valued, for instance, then you're buying at the wrong time. But you think there is value still in the Canadian energy.
Well, I think so. There's companies out there now. One of them that I follow is Vermilion Energy, and they're an international gas producer, and they have something like a 40% free cash flow yield right now. That's how much money they're making on their investment, like 40%. Yeah. And that's based on forward prices. Now, forward prices could collapse, but they can also hedge for the next year or 2 years and lock in a lot of those prices. Yeah. And there's a lot of companies that have cash flow yields in excess of 20%, which is a crazy good number.
Yes.
So they're going to be paying dividends like this special dividend that you mentioned. There's another little company that I follow that their shares I won't mention. Their annual requirement to keep production flat is about $500 million. They pay about $170 million of dividends on top of that. So that's a total requirement, if you consider their dividends a cash requirement of, let's call it $700 million. And in their IR presentation, they show at $50 a barrel oil in 2022, they'll generate about $300 or $400 million in excess of that. And at $80 oil, they'll generate like $1.1 billion in excess of that. So that could all be returned. They'll go to pay off their debt. But once their debt is paid off, that money could go back to shareholders. So if their current dividend is a decent yield, it's like 3 or 4% right now. Well, just think of adding 5 times that to a dividend yield, right? It's but that's realistic. Like if oil stays at $85, that's what their year will look like. That's what exists in the marketplace right now. These situations where these companies have that much cash, it's sort of unprecedented. Where it's not going back into drilling production to growing production.
The worry, though, is if you zoom out, say 5 years, and you buy now, and you're trying to make a decent return, I suppose you could hold it for a year or two and get your money out, but energy's been so volatile. So if the average investor invests for maybe 3 or 4 or 5 years, if you're not a day trader, the worry is that you'll get burned.
That's right, and that's exactly what's holding these companies' share price back.
Right.
Like we just talked a little bit earlier about how some companies have risen to 50% of what they were 3 years ago or 4 years ago, and the market is still saying that's right because you're right. So in 5 years, let's say somebody develops a new battery or whatever, and wipes out oil demand, that company's shares could go to zero. So the market is saying, yes, that's absolutely right. You're getting a phenomenal cash return now, and you will for 2 or 3 or 4 years. Right. But in 5 years, you might be worth nothing. So are you willing to take that risk?
Right. That's the kicker.
So yeah, that's the kicker, and that's the that's one reason that the valuations today sort of make sense, because that's a possibility. It's up to an investor to decide what the probability of that is, but it is a possibility. It's always a possibility. It has been since the beginning of time, or since the beginning of oil. Somebody could come up with a cold fusion or small nuclear reactors that take off everywhere, or some sort of home heating. There's always some technology on the horizon. It's technology, yes. Right? And there's something being developed in a lab every day. You can, if you read the tech news, you'll read about a big breakthrough in something. But that was happening 30 years ago when I used to go visit my uncle and read his Popular Mechanics magazines. Every month there on the cover, there was some new breakthrough in aviation or mileage or carburetors, or there's always a breakthrough, but commercializing it is always the challenge.
I guess in defense of Canadian energy, like we were talking about earlier, you still need oil and natural gas for just so many things in your life.
Oh, that's right. There's the pure. If you take oil, people think that we could decimate oil demand by replacing cars with electric vehicles, but that's a fraction of it. Yes. I think there's something like a third of world oil demand is for lubrication and things like that. That's not going away. The company that was trying to ship bitumen by blocks, canopucks through put them on rail cars in plastic blocks to Asia. They'd mapped out 10 or 12 million barrels a day of demand for bitumen in that purpose for road use, for paving, for textiles. It has nothing to do with combustion. Right. So there's tens of millions of barrels a day of demand, even if we stop burning it at all. And on the natural gas side, it's really hard to get around the idea that we're going to replace natural gas as a heat source anytime soon. Heat pumps don't work in cold weather. The renewables don't work when you need them the most. That's the problem. At minus 30, there's very little wind, so wind doesn't work, and solar obviously doesn't work. At plus 30 or 40 or whatever the temperature gets to, actually solar panels lose a degree of efficiency for every degree above 78 degrees Fahrenheit. So at 100 degrees Celsius, a solar panel is actually not very effective at all. And even then, it's only effective for part of the day because it loses some efficiency. And then there tends to be no wind and heat waves either. It tends to be quite calm. So you lose wind and you lose some solar, or at best, solar is for part of the day during a heat wave. So you need backup demand or backup supply then, and then when it's cold, you need the backup supply too. So there's no getting around that. And some people point to batteries as a solution, but that's not realistic either. No serious person has ever mapped out a route by which you could generate that kind or store that kind of power in batteries, whether it's pumped hydro or lithium ion or whatever. It's just not realistic.
Yeah. And that's not to say you're anti-renewables.
Absolutely not. It's
just
I've always been pro them. I wrote on my website about 6 years ago. I was cheering Elon Musk on, and I said we need more wind power because we need to take power away from OPEC, who's just jerking the world around.
Yeah.
So I was an advocate of those things a long time ago. I was more excited than anybody when Tesla first came out with an electric car. I thought this is the best thing ever. I can't wait to have one. Yeah. And so I'm not against those at all. It's just, and I think at the end of the day, if we find a smart equilibrium, we will have an amount of solar. I think if you develop solar film for windows or something, that would be phenomenal. I don't think we should plow under big fields to put up solar installations. I think that's environmental destruction. But rooftop solar makes sense, and all these things make sense within moderation. The grid has a cycle to it. It needs power at certain times of day, and in the middle of the day, it needs a certain amount of power. And operators should be mapping out the right amount of solar to have there. That should be part of the game plan. Right now in California, I just saw a map the other day that, and it's 2 years old, but in certain parts of the year, they curtail solar power because there's too much during the day. And that's physically curtailing it. The other power providers have been chased out of the market at that time of day. They get charged money. Power prices go negative in the middle of the day. So what does that do to a backup power supplier? If you're there producing power in California and you're going to get a bill for what you generate in the middle of the day, which offsets some of what you make at night, capital will flee from that too. So there should be there's a smart amount of solar, there's a smart amount of wind, there's a smart amount of electric vehicles. Electric vehicles make total sense. I understand where people love them in the city if they're just a runabout and you get home, but they work for suburbanites who have a garage. They don't work for apartment dwellers. They work for a small runabout rather than a big full-size car, in my opinion. The biggest selling electric vehicle in China is a tiny little EV that costs about $4,500 US versus a Tesla, which costs $30,000. But they're small. They're four-seaters. They only do like maybe 60, 80 miles, but young people love them because they can charge them up quickly. They can get them in fun colors. You can get a fake fur interior, and it's like a little fashion accessory. Yeah. But it's perfect for these people. They zip around the city. Nobody likes the air pollution in urban cores. So and maybe a whole fleet of delivery vehicles makes sense as electric vehicles. If you're delivering bread around the city, what do you need a gas engine for if a battery works just as well? So, and I've heard buses don't work very well for electric. I can't remember the reasoning for it, but a lot of places have tried them and they're not going with them. Maybe it's the weight of the vehicle or something. So there's a logical home for a lot of these things. And I think that would be the perfect world where we get to where we're using all of these things. We're using hydrogen for some things. We're using natural gas in buses if that's what they require. We're using we have higher mileage vehicles through government regulation where they say you have to have a certain minimum fleet average like they used to, and then you can sell the big expensive or polluting trucks, but you have to sell a bunch of smaller cars too. So. And then you have a bunch of electric vehicles that operate in some space. And then maybe fuel cells really do develop, and maybe a hydrogen network develops, and then people start switching to fuel cell vehicles, which is, I think, a much better solution than electric vehicles. I would love to see fuel cell vehicles take off. If the price was the same and there was a fuel cell vehicle available for what I bought my most recent vehicle with, I would have bought the fuel cell one for sure.
Yeah.
I wouldn't buy an electric one. I just don't trust them in winter, and I don't want to get stranded with one. I just don't see a solution to that for the kind of driving I do. So yeah, I'm not anti anything. It's just, but the for me, and maybe it's because I'm in the business and people just say I'm just defending my industry, but I think that's true. But it's also true that the world can't run without hydrocarbons
at the moment.
We can't live the way we want to live at the moment, and not in 10 years and not in 20 years. I don't see, unless there's some big breakthrough that is destabilizing. Even breakthroughs are hard to envision. I talked about this. I had a lot of discussions about this when there was a rumor that cold fusion was going to become popular about 15 years ago. And there's a conspiracy theory out there that the government shut it down because it would be too destabilizing. But if you think that something like that did happen, what if a new type of reactor was built that functioned perfectly and everybody, and it was economical and whatever, it made sense, everybody bought into it. Like, how quickly could you put that out as like, how quickly could you rewire the grid? Now, how easy would it be to do that? Like even if you had a solution that worked, how easy would that be? There's the National Renewable Energy Laboratory in the U.S. So obviously pro renewables, they've mapped out how the U.S. can go all wind and solar and renewables. I don't believe it because I don't think the batteries can handle it. But one aspect of their analysis that was interesting was that they said to do this would require a doubling of U.S. high voltage transmission lines. The U.S. has 240,000 miles of high voltage transmission lines. So you're talking about doubling that.
Yeah.
And what are the regulatory hurdles to building a 500-mile line? It's like a decade-long project to get buy-off from everybody. So that's like a 500-mile line. Or Quebec or Massachusetts is trying to build a line from Massachusetts to Quebec to import green hydropower, which I don't agree is green, but anyways, it's considered green. It's renewable. So they're trying to build this several 100-mile line. That got vetoed by New York State, and it just got vetoed by New Hampshire, I think. Both. They can't build this line across there for regulatory reasons. There's too much opposition. That's a 200-mile or 300-mile line. How are you going to build 240,000 miles in the United States?
Right.
Just think about this. So but all of these things are what has to happen. So you need that order of magnitude of rewiring. You need 4 times as many mines to get the minerals, and you need the money to pay for all this. So just follow one of those down the rabbit hole of solutions and just see, just even as a mental exercise, how is this going to work? And you come to the conclusion it's not going to work. So I think we're going to come to an equilibrium where we have much reduced fuel usage because we maximize wind and solar and whatever else. And we're gonna have more efficient vehicles. I hope we recycle a lot better. I hope that becomes the priority, that what we have we use, instead of going down and chopping down new whatever or clearing new paths for something or blowing the lid off mountaintops to get at the lithium. I hope we start using what we have better, and I think that's where we're going to wind up. But there's, All
right, good analogy I've heard before is that probably 50 years from now, maybe there'll be combustion engines around, but it'll be kind of like the horse. Horses are still around. You can ride it to get to work, but nobody does. So the odds are that there'll be something different in the next 50, 100 years. We just don't know what.
The odds, I think statistically speaking, that's probably true, that something's going to come along that's better.
Right.
I think the people point to that transition from horse to automobile as an example of how quick a transition can take place. But I think if you're expecting that kind of a leap from internal combustion to something else, you have to see the same level of benefit that internal combustion provided. And there's nothing out there that provides that magnitude of benefit. An electric vehicle does not. It makes you feel good, and it's greener and whatever else because you don't have to fuel it, and it's less money on maintenance. But that's not an order of magnitude bigger, not even close. Like a horse, with a horse, your world was 3 miles in radius. With a car, it was infinite, right?
Right.
So realistically, became 100 or 150 miles out of the chute, and then it just expanded from there. So that's the difference, right? And that doesn't exist. There's you to replace internal combustion. If electric vehicles came, let's say the average internal combustion vehicle is $40,000. If somebody came out with an electric vehicle, it's $8,000 that does the same thing. Then I'd say you have a revolution on your hands. But if it's going to be the same cost, then people are going to say, I'm not taking the risk of dying on a minus 20 day out on the highway. Nobody comes along with a jerry can to fill up your electric vehicle, right? So, yeah. So I think that's the difference, that there's that's not to say something won't happen. Something absolutely could happen.
Well, that's a great conversation.
Oh, yeah. Filled up the time. Hey?
We've been over an hour so far. So you're still writing full time?
In my hours, I write as much as I can. It's not as. I think I'd like to move on to fiction or something. The energy space, for a long time, it felt like there was very few of us that were saying we're talking about the need for a different energy conversation. And within the past 6 months, there's a lot of very, very good and smart writers out there saying the same thing. Really? So I don't think it's needed anymore for what I have to say. There's some guys you follow. I wrote an article a couple of weeks ago. I listed a handful of them. There's a investment firm in the U.S. that go by the name of Doomberg, and they started off on Twitter. They have a Substack now, and they put out just the most intelligent and insightful analysis I've ever read. And they do deep dives. They just did a recent one into the implications of a shortage of urea, AdBlue it's called. There's that one of the side effects of, sorry, I'm getting to another story here, of the natural gas shortage is that some products are being in short supply and people don't notice the repercussions of them. One of them is something called AdBlue, which is a urea type of catalyst that you add to diesel engines to clean up the exhaust. And it's like a little separate tank and you pour it in. And modern diesel engines require that to run. But there's a global shortage of it. And there's like an Australian firm that said, we're going to park 250 of our semi-trucks because we can't buy this stuff. So that there goes the supply chain that gets all shot, right? And so they unearthed this. So there's a bunch of people out there that have kind of, the smoke is cleared from the alarmists and activists dominating the narrative, and reality is popping up. Like in Europe, there's an energy crisis there. People's utility costs are going through the roof. They can't afford it. Riots in Kazakhstan because they didn't put a price cap on. So there's this new energy reality where people are it's sinking into a lot more than just the energy aficionados. That the world is a aircraft carrier that won't be turned around in 300 meters. Yeah. It's going to take 20 miles.
That's a great analogy.
And the people are pushing at the side of it, saying we're going to turn this thing around in a quarter of a mile, but it's not. You can push it with whatever you want. It's not going to happen. So I think people are recognizing that the momentum of the momentum of the mechanism that keeps 7.5 billion people alive is just won't be changed. And I'm not even getting into the climate change debate about the risks or the potential consequences or the whether they're right or not. I don't know, and I don't care. It's irrelevant. It's just like this battleship is going, and you can say if it goes for 2 miles, it's going to do X to a coral reef, and it doesn't matter because it's going to go for 3 miles. Yeah. So that's I prefer to focus on the things that I can see are happening for sure. If we don't have a healthy hydrocarbon system, a lot of people are going to die in the next 5 years. That's just the way. I believe that to be true, and people don't believe it. That's up to them. That if that exposes us to risks in 30 or 40 years, my vote is I think we would find ways to adapt to that. And I would rather have that risk than I would of cutting off the world's fuel supply before it's ready. So
I usually end with, what are you reading these days? I like to ask people. I know you're an Nassim Taleb fan.
Yeah. I'm actually rereading one of his books. I had 4 books on the go. I was reading a comedy book by Christopher Moore called Noir.
Okay.
I was reading a book by N.J. Ayuk from the head of the African Energy Chamber called Billions at Play. It's about the African energy industry. I have a new book called Bad News, How Woke Media is Destroying Democracy by Batya Ungar Sagon. That's a phenomenal book. And there was one other one. Oh, I just finished reading Crime and Punishment by Dostoevsky. Yeah. I finished that over Christmas.
That's an accomplishment.
Yeah. It's a bit of everything. So,
you ever read War and Peace?
Yeah, I read that, yeah.
I got it on my office desk, so it's something I have to read before I die, I feel like.
The names are a challenge, but the story and the lessons out of it, actually, the lessons out of War and Peace are so applicable to the climate change thing. It's unbelievable. The theme of the book is that nobody knows what's going on. Chaos. And you're a general, and you Taleb talks about this too, is that there's history writes the story of the winner. And they say that the general made a brilliant strategic call.
That's so true.
But if you're on the ground at the time, nobody knew it was brilliant at all. And there's a lot of guys that made similar decisions that the weather turned against them and they got wiped out or whatever. So history declares these guys the geniuses. And War and Peace was so good for that. It was like something happens in a battlefield. It's like, oh, well, I guess that worked out. It's a recognition of that's how the world unfolds.
Right.
And it's the energy transition is the same thing to me. It's like there's people just charging out, and some things are going to work and some things aren't. And we think we have a master plan, but we don't know what's over the brow. And so I read that quite a while ago, but the lessons out of it. It was a challenging read. It's a great story, but the names are hard to keep track of, just like Crime and Punishment, which again was a classic. I highly recommend it. Just the journey into the psychology of a human is just outstanding. I understand why it's been a classic for 100 years. So, yeah.
Well,
that's
thanks
what's on my nightstand. Oh, you're welcome. Pleasure to be here.
Really appreciate your time. And if people do want to read more of your articles, are they anywhere?
Sure. They're on the BOE report and also on my website, Public Energy #1. And my book is The End of Fossil Fuel Insanity, and that's on Amazon, CA and COM.
Awesome.
Thanks, Trevor.
Well, thank you very much. We'll wrap it up there.
Okay. Talk to you again soon.
Hey, thanks for listening, everyone. Hopefully you enjoyed the episode. If you liked what you heard, check out roadsbros.ca, where we will have upcoming shows. Until next time, happy coffee.